So we're in an interesting time right now. A lot of people are very confused. A lot of people are very scared out there. And I wanted to take a moment. It's a very late night video. I might be recording this at midnight or so. And it's something beautiful about recording videos very, very late at night. I think I usually just kind of think different. You know, there's no distractions. There's no distractions. Everybody else is sleeping. No distractions. During the trading day, there's so much white noise out there, so much going on, so much market news, so many moves in stocks. Am I going to buy stocks? What stocks am I going to buy? How much am I going to buy these different stocks, right? So much going on. And at night, there's just nothing. It's just silence, and you get to just take a step back and take a 35,000 foot view of everything that's going on out there. And tonight I want to take you on a little dangerous mission. We're going to go inside my brain tonight, and I want to kind of explain how I think and how I think about things big picture and my views on exactly what I'm doing right now and why I'm going about things as deliberately as I'm kind of going about them here. And what we're not going to get into is, how much the Nasdaq's down this year, or what PE ratios are at right now, or price to sales ratios, or what the Fed's doing or not doing. That's not this video. That's the furthest thing from this video, to be quite frank. We can cover that in all the other videos. But this video, we're flying in an airplane, man, and you're going with me, and we're going to have a little chatty chat, okay? And so I hope you guys enjoy this as always. I appreciate you joining me for a video like this. I think this is an important video. This is one that lasts. I think this is one that, is going to be relevant to you years to go in the future. I think this is one of the very rare videos I ever put out that you should save in your notes in your phone or something like that, and come back to this video every few months, because I think there's going to be points in your life and in your stock market life where you're going to need this video, where you're going to want this video, and where this video is going to hit differently. And I think it's one to save. Let's just call it that. Okay, so where I want to start this video out is there's the overall U.S. economy, right? And this is this gigantic thing of, trillions and trillions and trillions of dollars. And it's massive, right? And then there's obviously the worldwide economy, which is an even way bigger umbrella, right? But I just want to think in terms of the U.S. economy for a moment, right? Because when it comes to the U.S. economy, think about this for a moment. Just imagine owning the whole thing. Obviously, it's completely unrealistic. No one can ever own the entire U.S. economy. But imagine if you did, right? Imagine that. That would be ridiculous. I mean, you can't even fathom it. I mean, even the biggest companies in the world, the biggest companies, the Apples, the Microsofts, the Googles, those sorts of companies, Amazon, right? Even those gigantic, massive companies of the overall U.S. economy, it was small portions actually relative to the actual U.S. economy. It's actually pretty amazing how broad and how massive just the U.S. economy is. Once again, we're not even talking about worldwide economy, just the U.S. economy, okay? But imagine owning the whole thing. Imagine how powerful you'd be. Imagine, the wealth is you can't even fathom it. It's you literally, it'd make Elon Musk look like a peasant. It's just you can't even fathom owning the entire U.S. economy, right? Now, your goal should be to own as much of the U.S. economy as possible over time, right? And the more of the U.S. economy you own over time, the better your financial systems, your financial situation is going to be, right? If you own 10% of the U.S. economy, oh my gosh, well, you would have wealth that's you can't even understand, right? If you own 0.00001% of the U.S. economy, the amount of money you have is just ridiculous, right? So your goal should be to own as much of this pie as possible over time, right? Now, the beautiful thing about the pie, right, which is the U.S. economy, is it gets much bigger over time. Even though all odds are stacked against it, there's always so much bad to look at throughout different times. The United States over time is a very battered thing, right? But we make it through, and we always end up stronger and bigger than before, right? And It's pretty fascinating how that works, but the U.S. economy just always gets bigger, and sometimes it'll have a short-term shrink. Like for instance, 2020, obviously when Rona happened, if you have a massive recession, something like that, the pie gets smaller, but then it just grows and grows and grows, and over a 5-10 year span, it's much bigger than it was 5 to 10 years previous, right? For reference, the GDP when my mom was born was $563 billion. Now, for reference today, the U.S. GDP is roughly 23 trillion plus, okay? Think about that for a moment. Just from when my mom was born, 563 billion, and now we're at 23 trillion plus for U.S. GDP, right? It's just fascinating. And you think about everything that happened over the course of my mom being born all the way to this day today, right? A lot of dramatic things and a lot of time periods when the cards were stacked against the U.S. economy and stacked against the United States in general. Whether we're talking, I don't even want to get into all the million different things. If you know anything about U.S. history, there's been a lot that's transpired over that time, right? And despite that, the U.S. economy just got bigger and bigger and bigger. I actually have a picture of the U.S. economy when my mom was born. There it is, okay? That is the U.S. economy when my mom was born, and that is the U.S. economy nowadays. By the way, Lakers fans, talk to your team, man. They're going to need to get a new sponsor. Come on, man. I don't even know if Wish is going to make it. What are we doing there? Okay, something's got to change there, okay? So what do we know about this is the goal is to own as much of this growing pie as possible over time. And the more of this growing pie you own, the more you're going to financially prosper over time, okay? So that's a thing of beauty. Now, where this kind of gets into the chess game and having all queens, right, is what if we take this a step further? And what if we say, what if I could own companies that are growing their market share and becoming a larger piece of the U.S. economy pie over time, right? Oh, so now we just took things to a next magical level, right? Because it's one thing to be able to buy into the U.S. economy. It's another thing for the U.S. economy to grow massively over time, right? And the next level is if I can buy companies that are growing their pieces of the pie bigger and bigger and bigger and bigger, and the pie on top of it keeps getting bigger and bigger and bigger. Ooh, now we're on to something, right? It almost reminds me of this game I used to play back in the day. I remember, as a kid, we'd go to this place called Uncle Sam's in Arizona, and man, this place seemed like it was such a far drive, as a kid and whatnot, right? And you used to eat cheesesteaks and pizzas there. But they had this game there that was so much fun as a little kid to play this game, and some of you might have played it before, called Pac-Man, right? And it almost reminds me of, being Pac-Man. But here's the thing. If you remember in the Pac-Man game, right? You ate the little, I don't know what you call it, the little dot things, right? But imagine if you could have a bigger Pac-Man that's also eating the Pac-Man. That's like a, out there kind of idea. So you got this little Pac-Man that's eating everything, but then you got a big Pac-Man that's eating all the Pac-Mans itself, right? That's kind of some next level stuff, and that's kind of the way I think about this. Man, this is just sad. I mapped it out. I mapped it out how long that ride used to take. Supposedly it used to only take like 20 minutes. Like, what? I mean, as a kid, when you're in the car, I swear that ride used to be like an hour, like 45 minutes. I just mapped it out. I said, well, it's only 20 minutes. Like, you got to be flipping my flapjacks. That's ridiculous, okay? So the way you kind of think about this, right? I'm out there buying stocks today, right? And I'll be buying stocks next month, and I'll be buying stocks the month after, and the month after, and the year after, and the year after. I've been buying stocks for 14 years straight. I'm going to be, nothing changes with me. I buy stocks, and the better prices you give me, the more I'm happy to buy, right? The cheaper, it's just bottom line, like the more undervalued you're going to give me stocks, the heavier I'm going to buy, essentially. This is the way it works, right? So if I think about, like, when I go to buy companies, right, I'm buying into a bigger portion of the U.S. economy each time I add ownership of companies. And I'm also like to buy only companies that are growing their piece of the pie bigger, right? So for instance, like Meta would come to, is an example, right? They're constantly eating more pie, and their piece of the pie is getting bigger of the ad market of overall commerce, right? Of a small company like a Corsair, they're a very small piece of the pie, but they just continue to grow over time, right? Gaming and streaming hardware, something like a Google McDougal, ad market, commerce in general, right? Food company, Palantir's, it's hard to put them into one bucket, but I'll just put them into SaaS and cloud, right? And they continue to grow and take market share and just become a bigger and bigger piece of pie over time. Amazon, when it comes to commerce and cloud in general, just continue to become a bigger and bigger piece of the overall pie, right? And so that's a pretty magical thing when you're not just buying into a piece of a growing pie over time, which is the U.S. economy, but when you're buying into individual pieces that themselves are becoming a bigger and bigger piece of that overall pie. That's where real magic kind of happens there. And so that's the way I think about this, right? And that's why I don't get into all this pessimism in the short term stuff like that. It doesn't even register to me. Like I'm above that. You know what I mean? Like I'm on some different stuff that it doesn't even like faze me. I'm like, okay, just give me more stocks for cheaper. It doesn't scare me. I'm not fazed. I'm like, that's a good thing for me. If I can add more pieces of this growing pie for cheaper, 2 thumbs up from me. I'll take those all day of the week, right? There was a fascinating study done in 2019 by this, I don't know if it was a research firm or what it was, called Dummo or something like that, okay? And what they found, and once again, this was based upon like 2019, 2018 numbers, is there was $1 million spent online every minute, just in the United States, okay? Now, I don't know, I'm sure the numbers are much bigger here today than it was back then. But just think about that for a moment, right? I don't know if this video is going to... My average video I post on the channel is probably 20 minutes, let's say, for instance. So in that 20-minute span, a minimum of $20 million of transactions just online just went through, right? Never mind, people going and spending money at restaurants and in physical retail stores and at the food store and Walmart and all these other places, right? That's just online. It's just like fascinating to understand like how big the numbers are, right? And how much of that pie there is to gather out there, right? Like there's so much money, it's ridiculous. And I think sometimes we get so into this like kind of scarcity mentality because, we turn on the news and it's like, it's the end of the world, right? The financial media, and you go on YouTube and it's like, it's the end of the world. Everybody's doing, it's the crash and depression videos and, the Fed did this and Fed did that, right? And you're getting caught into all this like scarcity, when, in reality, the big players, they just don't even think in those terms. You got to understand, they don't even process that. What the Fed did today, that means nothing to big players. It doesn't even register. They're aware of it. It doesn't matter to them. They don't care. They're bigger than that. So much bigger than that. And, if the economy is growing or not growing or whatever, they're going to grow their pieces of pie. It doesn't matter because they have special companies, right? And so, that's where we kind of get into this thing where regular folks get so caught up into the short-term stuff and fear. And the big players are so not focused on that game. They don't give a flipping flapjack and care. Does he think Bezos is out there caring about the Fed just raised 75 basis points? No. Do you think Bezos cared what the Fed was doing in 99, 97, 95, in 2003? No. It doesn't even register. So mumuch bigger than that. And as an investor or somebody that's just in the money game, you have to get to this place. Because if you don't get to this place, you're always going to be in a little scarcity mentality. And it's just going to end up holding you back massively. And this is a fascinating number, okay? So you want to take this a step further. When they did that study, every 1 minute, $283,000 was spent on Amazon, right? So think about that for a moment. And that was, once again, back then. The numbers are much bigger nowadays, I'm sure, on Amazon, spent every single minute. One company that started in a garage, 25 years ago or so, right? Roughly, at the time of this happening, right? Is doing almost $300,000 of revenue every minute. What? Okay, that's the type of thing that opens up your brain a little bit, and you kind of start figuring out, oh man, I'm getting so caught up in all this short-term crap, and I'm missing the whole big game that's right in front of us right now. Oh my gosh, okay? I want to play something for you here. I think this is very important. It's a very important interview. I don't know how many of you guys have seen this before. I want to react to this. Now, I usually only do reactions on my new channel called Jeremy Lefebvre Makes Money, but I wanted to react to this in this video because I thought it was so appropriate for the vibes of this video I'm putting out here that I want to react to this on here. This is Jeff Bezos in 1999, okay? And this was right before the dot-com crash, essentially. Right after this, Amazon's value at peak fell over 90%, which is crazy to think about. The market cap of Amazon fell under $10 billion at that point. I think it got close to even under $5 billion in that whole situation. It's extraordinary.
What matters to me is do we provide the best customer service? Internet, schminternet.
Pikachu, Pika Pika. So Amazon 94, roughly. Wow, got up to 30 billion at that time. Wow.
Given the decades of wisdom that has built up in the business world, investors, it sounds like you're saying, are making a big speculative.
This is very close to the absolute peak for Amazon. It was very, very close to this.
If they're investing in your company's stock.
Well, I think all internet companies, the stocks are incredibly volatile, and
But even long term.
Long term, I believe that it's very easy to predict that there are going to be lots of successful companies born of the internet. They're going to have very large market caps and so on. I also believe that today, where we sit, it's very hard to predict who those companies are going to be. So you can make bets on these things, and I think that Amazon.com, if we're not one of those important, lasting companies born of the internet, we will have nobody to blame but ourselves, and that we will be extremely disappointed in ourselves. But there are no guarantees. It's very, very hard to predict. If you go back and look at the companies created by the PC revolution, in 1980, you probably wouldn't have predicted the 5 winners. The 5 biggest winners. There have been lots of winners, actually. So this space is a little different, and brand name may mean more, and there's some increasing returns kinds of things may mean more. But I believe that if you can focus obsessively enough on customer experience, selection, ease of use, low prices, more information to make purchase decisions with, if you can give customers all that, plus great customer service, and with our toys and electronics, we have a 30-day return policy. If you can do all of that, then I think you have a good chance. And that's what we're trying to do.
So, it's fascinating. We got to talk about that point he just made there, right? In 99, very hard to tell who was going to be the winners and losers of the internet. And that's why people have gotten, I think, made one of the biggest mistakes in this whole debacle of 2022, in my opinion. They have basically assumed what is going on now is similar to the tech bubble, when it is not at all like the tech bubble. In the tech bubble days, you got to understand, it wasn't just companies went to super high valuations. It was companies with no business models went to super high valuations. Companies that people are like, I don't even know about that thing, if that thing's going to work, went to super high valuations. Whole different dynamic. When you talk about the market maybe gets a little overvalued and some, stocks get, let's say, overvalued at a different time, it's a whole different thing than a bubble. Now, if we want to speak about what is the thing, and this is what is always, I've looked at this, what is the thing that reminds me over the past couple of years of the tech bubble? That was a crypto, right? Because in crypto, it's impossible to really kind of differentiate, who's going to be the big winner here, right? It's kind of like, well, I think there's probably Bitcoin, Ethereum are making it, but after that, I don't know. What are these other things? That's the moment in time we're in. When it comes to crypto, I think we're in that tech bubble stage. We were in that tech bubble stage, and obviously that's popped huge now, right? Where it was kind of like, what's going to be the real big things over the next 5, 10, 15, 20 years, right? And I think it's very hard to tell what those things are going to be. And, obviously valuations went to extreme levels in relation to all of those, right? And now they've obviously started coming down. And with crypto, it's not that that's going away, and I'm sure there's going to be a much bigger thing 10, 20 years out. But who are the individual winners there? I think that's a very, very difficult choice and to try to figure out who's going to be the winners there, because we're still trying to figure out that whole game. It's a wild, wild west when it comes to that, right? So yeah, that's the main component. People haven't really studied the tech bubble. They don't really understand it on a high enough level on what the positioning of companies were back then versus what the positioning of companies are in 2022. It's a night and day difference. Remember I showed you the picture of, LeBron as a kid versus LeBron as a grown-up. That's the difference we're talking about, okay? It's technically the same person, but one's going to win, the game of 21-0. It's going to be the big one, right?
A pure internet company anymore either, are you? I mean, you've got millions of square feet now of real estate. You've got a huge and growing inventory of items that you keep in stock.
We do whatever.
And you've got thousands and thousands of employees now.
Yeah, we have over 3,000 employees and over 4 million square feet of distribution center space. And those are things I'm very, very proud of, because with that distribution center space and half a dozen distribution centers around the country, it allows us to get product close to customers so that we can ship it to customers in a very timely way, which improves customer service levels. That's what we're about. If there's one thing that Amazon.com is about, it's obsessive attention to the customer experience.
Now, this is extremely important and telling. And this is why I say you got to save this video for the future, okay? What was just explained there is almost hard to wrap your head around. This gentleman was just questioning Jeff Bezos on the decision to add 4 million square feet of warehouse space and to add a bunch of employees, right? He was having trouble understanding the concept of that. In 2022, no one has any trouble understanding that concept. That is not something that's hard to understand. Like, yeah, Amazon is going to need a crap ton of warehouse space, right? And a lot of employees. But in that moment in time, people didn't understand it. Like, you're adding all this warehouse space, you're adding all these employees. I don't know about this. This seems crazy. And, it's so fascinating. It's so fascinating to see that they just didn't get it, right? They didn't get it. And now it's so easy to get. But you got to put yourself back in the shoes of 99. People just couldn't wrap their heads around it. The ones that could, obviously, I'm sure were buying in not just 99, but 2000, 2001, 2002, 2003, 2004, 2005, made ridiculous sums of money, literally life-changing, and not just life-changing, but, changed the trajectory of their entire families forever. But most people just had trouble wrapping their heads around it in those days.
And that's what those distribution centers.
But you're not a pure internet play.
It doesn't matter to me whether we're a pure internet play. What matters to me is do we provide the best customer service. Internet, schminternet, that doesn't matter.
Well, but it does matter to your investors to know whether they're investing in a company that
they should be investing in a company that obsesses over customer experience. In the long term, there is never any misalignment between customer interests and shareholder interests.
Well, that's the same argument that somebody at Walmart would make as well, wouldn't they?
I don't see why not. I think they should make that argument.
So
it's a correct argument.
Okay. So you'll open as many.
I just love when individuals are just on a different level. That's all I'm going to say about that. I'm not going to be disrespectful. Different individuals are on different levels. That's all I'll say.
Feet of space, physical space, as you have to hire as many employees as you have to
service customers. Absolutely, and we'll do it as rapidly as we can.
That's a very cost-intense proposition.
Not compared to opening an equivalent network of retail stores. So if you open a bunch of chain stores, look, when we open a distribution center, we're opening places that may have, where we may pay 30 cents a square foot for a lease instead of paying $7 a square foot, which you might pay in a high traffic retail area. So when you compare those things, they're not the same. You can't compare a big chain of retail stores to half a dozen distribution centers. It's just not, it's bad math.
Okay.
Bad math. Oh, it's so beautiful, so beautiful.
Either way, whichever side.
We call this business mastery, okay? Business mastery is not what you learn at your local university, okay? This is business mastery, what you're watching in front of your face right now.
You believe you're making what it seems to me to be.
There's only one side, which is obsess over customers.
But it seems to me that both with the speed of your growth in terms of the number of stores online that you're opening, the different businesses you're getting into, the number of distribution centers you're opening and new employees you're hiring, that you are making an intense gamble here, which is twofold. One, that you can run this number of businesses, different businesses, well, and two, that you can make money by selling vast volumes of...
That's fascinating. Even the way that that interviewer viewed Amazon as running different businesses, as if the distribution centers were a different business than Amazon's website, which was a different business than, I don't know, that's fascinating. Like, it's all one thing. Like, once again, it's an easy concept to understand in 2022, but back then, like, this guy was literally thinking these were different businesses, and it's like, no, this is all the same business. You realize this, right?
Product at essentially razor-thin profit margins.
I think that the first one in particular I agree with wholeheartedly, which is that there's no guarantee that Amazon.com can be a successful company. What we're trying to do is very complicated. There's huge execution risk involved. We have a terribly complicated business. We're growing, historically very rapidly. We're opening new product categories. We're expanding in new geographies. We have whole new business models with things like auctions. Now, we think this is the less...
Auctions failed, by the way, so that could have been another reason to have sold Amazon stock, because auctions failed. So, they must be a bad company.
Of the two approaches, because scale is important in this business, and you need scale also to offer the lowest prices and the best customer service to people. So scale is important to us, and we're going to go after that kind of scale. But it does mean that the executional challenges are huge. And
it's amazing. Amazon actually had so many failures in its history. If you really, study the company, and the failures aren't written about, so you have to really dig this stuff up. But, they failed in trying to compete against eBay back in that day. They failed against trying to compete against Shopify. They tried to create Shopify clones so many times and just haven't been able to make it work. They failed trying to compete against, obviously, Apple and Google when they came out with their Fire phone, right? So Amazon's a company that's plagued with failures. And even despite those failures, it still became, a $1 trillion company that's likely going to become a multi-trillion dollar company unless the government ever breaks it up or something like that. They'll become a, $3 trillion, $5 trillion plus dollar company, even though they've had countless, and I mean absolutely countless failures over the past 25 years. Interesting.
So you'll find a bunch of people back in Seattle and around the world working very hard to make sure we service customers at the level that they're used to, and then even improving that.
Isn't it, to some extent, a certain amount of, with all due respect, corporate arrogance to assume that you can come into these businesses which you have no experience in and virtually overnight enter a huge variety of different businesses and become the best in those businesses and the market leader in those businesses and execute those well, when there are other companies that have been running these types of businesses for decades, if not more? I
don't think so. So when we first started selling books 4 years ago, everybody said, look, you're just computer guys, you don't know anything about selling books. And that was true, but we really cared about customers, and now we know a lot about books. And when we first started selling music, people said the same thing, but we hired the right people. So we don't do this in a vacuum. We go out and hire the best industry experts in each of these categories. That's the same with toys and electronics. So, we take this very seriously. We take the commitment to the customer very seriously, and we're not about to release something or announce something before it's ready.
Obviously, you guys know how the story turned out, but obviously Amazon stock went through a lot of dramatic crashes over the years, and but if you just kept your eye on the long-term prize, right, and you kept your eye on the numbers, right, it was, I don't want to say necessarily an easy hold throughout the years, but what you saw is a company consistently continuing to grow year after year after year. The growth rates would, sometimes be a little better than other years, right? And sometimes a little slower. But what the company consistently put up was growth, right? And they consistently improved their gross profit over time. And then net income kind of came down the road, right? And you had a management team there, and obviously led by Bezos, that was let shareholders know that we're spending aggressively because of how big this opportunity is over the coming years, right? And obviously the stock price was rewarded over time and rewarded tremendously. And but there was many moments when obviously you could have jumped out of that one. So it pays to understand who's taking the pie, who's continuing to take market share. Because one thing we know about Amazon over that 25-year plus stretch there, they continue to take market share. They continue to grow their pie, right? They continue to grow their pie year after year after year, despite everything that was going on. They continue to grow that pie bigger and bigger and bigger, become a bigger part of the U.S. economy, become a bigger part of commerce, and a bigger piece of that slice, guys. So, yeah, hope you enjoyed this video. Little high-flying video there, guys. I appreciate you joining me as always. Thank you so much. Also, if you're looking to join my private stock group and get access to the Discord chats in there, also get access to our new weekly private group investors report that comes out every Friday. Get access to the Discord chat where, you can obviously talk with folks about stocks like Palantir shareholders, NVIDIA shareholders, Tesla shareholders, the Chef shareholders, and also get access to all our course curriculums and things like that. Then go ahead and check out pinned comment down there. Much love and have a great day.